So for the owners who receive Schedule C income or self-employment income on a K1, and we're not talking about K1 draws from the S corp where the company kicks out profits. We're talking about partnership entities where the partners receive self-employment income in box 14A. For those individuals, their compensation is based on their net profit minus the company contribution that they make for themselves. So if somebody has a $300,000 net profit on a Schedule C and they're a self-employed individual, maybe they're a realtor or consultant, that doesn't necessarily equate to $300,000 in compensation. But if they're funding a 401k and they make, let's say, a $46,000 profit sharing contribution, because 46 plus the 24 is going to keep them under the 72,000. They're funding 46,000. They have to make sure that that's 25% of their comp, but their net profit of $300,000 gets reduced by their profit sharing contributions. So you've got 300,000 minus 46,000. Now you're at 254. You have to take 25% of that 254 to make sure that it covers the 46,000 in order for it to be underneath that threshold. So it becomes a little bit of a circular calculation because the more you fund, the less compensation you have, which lowers the amount that you can fund. So then you have to lower your contribution, but then that raises your compensation and you get into this whole mix. So for some self-employed individuals, it's easy. You can take kind of 20% of your net profit adjusted, and that will math out to 25% because of the way it works. But for other folks, it becomes a little bit more complicated, particularly when you have employees in there or especially if you're underneath that compensation threshold. If you've got Schedule C income of $700,000, whether you're funding 100 or 200, you're going to be capped at 360 regardless. So for those folks, this isn't such a big concern until you get into a cash balance plan where maybe you are funding enough to bring you down underneath that comp limit. So even if you've got a lot of earned income and net profit, we still have to adjust it to figure out what your compensation is in order to determine what your 415C limit is and what your 404 limit is. So those folks with self-employment income adds a little bit of complexity, but it's nothing your RPCs can't handle.